Hey, good morning. Let's go over today's trade plan. So in the overnight session, we can see that the downside activity that started yesterday afternoon continued, but then the market found support at 32 to 34, and since then we've just seen some continued balancing in the overnight session. So at this point, heading into the open, we're going to be focusing on 39 to 41 as the micro bull bear zone. As long as the market can hold above that area, we could be setting up for a move higher, and buyers can still maintain control as long as the market holds 39 to 41. On the upside, we have pre-market resistance 44.75 to 46.75, and a breakout above that would bring the high from yesterday into play. So the 54 to 56 area is initial resistance, and in the event of a breakout above the overnight high, 54 to 56 would be the upside objective. And first test of that area could get some rotation, but we just have to understand that as the market heads back up there, it'll be a second test of that zone, and the buyers would be in control. So we could see a move even through that zone and a test of 59 to 61, and potentially, tagging the open gap at 61.75, naked VPOC 62. That entire 59 to 62 area is pretty decent resistance in ES. It's a very major high volume node at this point, and it could take a little bit of work for the market to work through that. And for that reason, it could be a spot where the market just stalls, and we don't really get a strong move through that zone, at least on first test. So first test, that zone could be, decent resistance that we see a rejection at, and just some continued balance below that zone. Now, in the event that we do slice through 59 to 62, that also tells you something, and that would confirm a bigger picture shift in the directional bias, and it would be indicative of some really strong buying in the market. So that 59 to 62 area up top is very important, and the way the market reacts there will tell us, even on the really large time frames, where this market could be headed. But short term, heading into the open, 39 to 41 is a key zone that we're going to focus on. And again, as long as we're holding above it, the market would indicate that buy side is in control. And a break and hold below it would tell us that we're in a weaker market. Now, break below 39 would bring the 32 to 34 zone into play. But at that point, if you're seeing a strong rejection of 39 to 41, that would be an indication of a weak market. So 32 to 34 is probably not going to hold at that point. So, in the event of a strong rejection of 39 to the downside, we're looking at a move down towards 27 to 29 initial support. That's still an area where buyers could be active, but it's also an area where we still have to be cautious on the long side, because at that point, you've rejected the micro bull bear zone and you're breaking below the overnight balance, and you may not get much of a reaction at 27 to 29. Now, it is an important support zone, and for that reason, if you're short, it's good to cover and take profit at 27 to 29, but it may not be the ideal spot to get long, because we have that gap at 25 right below, and after that rejection of bull bear zone and a break below the overnight range, we could be looking at a test of the recent lows at 20 quarter to 22 quarter, right? So similar to the upside idea, if we hold and break out, we're going to the recent highs. Similarly, if we fail at 39.41 and then break below the overnight range, we could be looking at going to the recent lows at 20 quarter to 22 quarter. And, that's still a spot where buyers could defend, right? And we could simply be establishing a wider balance area at that point. So on the downside, 20 quarter to 22 quarter is really the critical support within this recent range. And if you break that, now you're breaking below a 3-day balance, and at that point, the sell side could really take over, even on the larger time frames, and we could be looking at a pullback to 1275 to 1475, and the 06 to 08 area. But right now, it's really going to be about how the market reacts to 39 to 41, and as long as that area is holding, we're okay. And even on the downside, if 32 or 34 does hold, then we still have to consider the long side. But the idea is that if we fail at 39, then this area probably will not hold. And even if it does, it could just be kind of a short-term, temporary thing, and then it actually cracks and we start heading lower. So that's something we'll have to read and gauge in real time. But short term, the buy side is looking okay as long as we hold above the micro bull bear zone. And if we continue balancing above 39 to 41, then the market could be setting up for an upside breakout and a test of 54 to 56 and 59 to 61. So those are the main ideas. On the econ calendar, we have new home sales out at 9 a.m. Central, and that's really the only econ release due today. Overall, it's been a pretty bullish week. So, even on pullbacks down to 25 and 20 quarter, 22 quarter, if we get it, the buy side can still be active there. So, let's see how the market reacts to 39 to 41 as long as we hold above it. We're going to position ourselves to be more bullish. And if we break below it, then we'll reassess and perhaps start focusing more on the short side. So those are our main thoughts. Let's see how well the buyers hold it up, and we'll take it from there.